Hi, this is Zak Mir, editor of Spreadbet Magazine, with a look at some bulletin board hero stocks on Friday, June the 26th. I'm starting off with Castleton Technology, which is a situation I've been following for quite a while. I think probably around the end of February, when the shares were around 0.8 pence, that were pointed out to me by people on Twitter. Since then, we've seen a consolidation around the floor of the rising February trend channel, and the 50-day moving average at 0.95 pence. I like this wiggle here that we've seen over the course of June, because that shows that the stock is trying to flush out the longs ahead of a move to the upside, or is likely to do that. And really at the moment, while we're above the 10-day moving average at 1.05 pence, it looks as though we'll hit the top of the February channel around 1.7 pence over the next 2 to 4 weeks. As you can see, I've also drawn a red resistance line projection from the end of December, which is heading towards 2.5 pence, and that's my sort of best case scenario target. Maybe over the next 2 to 3 months. Obviously, we need to break the top of this channel, and a few more things need to happen ahead of that. But 2.5 pence is probably the best case target over the near term. And as I said, the stop loss back below the 10-day moving average at 1.05 pence. That's also a trading stop loss that will move ahead with the price action. Next up is Mosman, where we have one of the biggest retracements you could ever wish to see here, back from 56 pence to around, I think, 17, 18 pence. Was waiting really to see how far the stock would come back. It looked as though it would come back to the 20-day moving average, which was around 18, 19 pence earlier in the week. The big plus point here so far is that we've actually not fallen back below the former resistance, which was around 15.5 pence in May, a couple of points there. So when you see new support coming in above old resistance, that is generally regarded as a constructive sign, hence these double trend lines here. A situation now already only back below 18 pence would abandon the prospect of a gap fill attempt towards 30 pence over the next few days. There was a gap down at the end of last week or the beginning of this week for the shares. If you're cautious on the bull argument, you'd be waiting for an end of day close above the 10-day moving average, currently at 27 pence. But it looks as though enough work has been done here, and if you are fussy on the stock, you'd just use the 20-day moving average at 20 pence as your stop loss anyway. The other point to note is actually in the RSI window, we had a bounce off the neutral 50 level again, which is a May RSI support line, and that is also normally a positive development. So that is looking encouraging there at Mosman, even though we haven't actually recouped that much of the losses from the June peak. Finishing off with a stock which is arguably one of my favorite ones at the moment. Favorite means that it sort of generally behaving itself in this situation meant that there was a bounce off the 50-day moving average at 1.6 pence. That was above the old March 1.24 pence peak. And as I said with Mosman, new support above old resistance can be very constructive. Earlier this week, I said that we were looking for an end of day close above the 10-day moving average, currently at 2.17 pence, to trigger a new leg to the upside. That was delivered on Tuesday, and good progress yesterday as well. We'd now like to see the 20-day moving average cleared at just under 2.6 pence, but really enough has been done for the shares to take off again, and only back below the 10-day line now would abandon the prospect of a partial or even full retest of the June 4 pence peak. Possible resistance at 3 pence initially, which was the May resistance. Rose Petroleum looking constructive at the moment. The RSI also looking good in the upper 50s, which tends to be a decent place to go long of a stock or a market. That's it from me. More updates on spreadbetmagazine.com.